Alright traders, how are you? Welcome back to the Learn to Trade channel. If you haven't done so, please subscribe to the channel. We will post every single day from now on. And yeah, it's pretty cool content, educational content, etc. Now, if you're not on the VIP channel, you are not on this trade, right? But I'm going to do the explanation of the trade here instead of on a blog post like I always do. I'm going to do this from time to time when the trade rationale is too long or needs a little bit more explanation, right? So what we did here, I personally caught the long side of silver and the team 2 when we broke to the upside, and we took profits here at the previous level of resistance, right? This is the first level of resistance that we took profit on. I rode the last bit of that trade all the way to here, to the 26.45, and today, personally, I closed, I still have running some longs, but very little. Around 90% of my trade is now closed, and we took this short. Now, why did we take this short even though I was long still? The reason is this. If you look at historic price action right here, you can see that this is where buyers picked up price up, right? And of course, this is the level that when we broke to the downside, sellers jumped in, right? I know it's a little bit soon, but the thing about this trade that I did like is that we were hitting the 76.4% retracement of the last leg down, which means that we are in a heavy area of confluence with with very strong bearish divergence on my oscillator, right? This is a hidden bearish divergence if you look at it closely from these highs, right? From these highs, we have these highs on the oscillator, and then we have these highs right here, and price is making lower highs. This is called hidden bearish divergence. This is a very, very strong sign of a bearish continuation trade, right? So the thing about this is that we took that trade. Now, this is the 1 hour chart. Let's go to the 15-minute chart. Right here. So this is the 15-minute chart. Now, why did we take the trade the way that we did? We actually entered the market at the break of this low right here, the break of this low. And the trade drew down for a little bit, but I was confident enough, even in the 15-minute chart, in the 15-minute time frame, we got some divergence. Now, this is true bearish divergence. Price doing higher highs and oscillator flat highs. So we have hidden bearish divergence on the higher time frames, and we have bullish divergence, bearish divergence, normal bearish divergence on the lower time frames, hitting that 76. So that's 76.4. Now let me grab my crosshair tool because I want to show you about some bullish targets that I was looking at the moment, and why I decided also to close most of my longs there. I'm still, like I told you before, I still have like 0.7%. No, I'm sorry, like 7% of the trade going on, or my long trade, but I'm heavy short at the moment. So the ratio between longs and short that I have, which is a hedge effectively, is like 7-1. So targets, right? We're talking about targets. 161.8, where are you? Here you go. So we hit the 161.8 area of the last leg down of the bullish move, right? This is a big target area for bulls. Also, we were trading inside of a wedge, right? And well, I didn't want to wait for the actual break of the wedge because my stop losses would have been too wide to first targets. My first targets are, of course, around the around the weekly pivot area right here. And so I found this inner structure right here, this inner steeper structure. and we enter the market at the break of said structure, right? Now we're in the profits, and we're not still going to move our stop losses to break even because right now what we're doing, what price is doing, is retesting the broken structure, right? So what we expect is, and because we have broken with the entire bullish, immediate bullish structure by printing this lower low, we are definitely, or the probability of success of this trade is definitely high. So hang on there, and happy trading, guys.